Only homeowners are eligible to apply for Norwich Trust's unsecured personal loans. Before you decide whether a Norwich Trust loan is right for you, it's a good idea to learn more about its characteristics. Formerly overseeing the group's unsecured homeowner loan was Norwich Trust, a subsidiary company of UK Credit. Norwich Trust assumed responsibility for the unsecured homeowner loan accounts held by UK Credit in January 2024. Current borrowers are not subject to any changes to the loan's terms and conditions. Unlike the majority of the lenders we've examined, Norwich Trust only accepts homeowners for their unsecured loan applications. Though the maximum loan amount is £20,000 sterling, the lowest loan amount is £3,000 sterling, which is greater than what you'd find with many other lenders. An alternative lender might be able to approve and transfer a loan more quickly than Norwich Trust, since they might take a few days to determine if your application is successful. Norwich Trust Loans Pros and Cons. Pros. The maximum loan amount of £20,000 is higher than some bad credit lenders we've reviewed, but keep in mind that you should only borrow what you need. You can choose to repay your loan over a term of 10 years, which is longer than most bad credit lenders that we've reviewed. However, a longer term means that you will pay more in interest overall. Cons. You need to be a homeowner to apply, but your property won't be used as security. It could take 2 or 3 days to get a decision on your application. Norwich Trust is a lender that may be able to offer loans to people with less than perfect credit histories. However, you need to own your own home to apply, so tenants won't be eligible for a loan from this lender. Even though you need to be a homeowner, the loans from Norwich Trust are unsecured and don't use your home as security. Norwich Trust will decide whether to lend to you based on your credit history and overall financial situation, not the value of your property. The application process for a Norwich Trust loan could take a couple of days, so it may not be suitable if you need the money more urgently. Once you have a Norwich Trust loan, you can make overpayments and pay the loan off in full. But there are limits to the amount you can overpay, and interest charges may apply if you clear your debt before the end of the term. Before you apply for a loan, it's worth using a loan eligibility service. This can help you to see how likely you are to get a loan from different lenders without affecting your credit score. Make sure you check that it only uses soft searches and see how many lenders it compares. Where Norwich Trust loans stand out. You could borrow up to £20,000. With Norwich Trust, you can apply to borrow up to £20,000. This is more than many other bad credit lenders. But even if you can borrow a larger sum, you should only ever borrow what you need and you can comfortably afford to repay. You could repay the loan over 10 years. The maximum term of a Norwich Trust loan is 10 years, which is significantly longer than terms offered by other bad credit lenders. If you choose a longer repayment term, your monthly payments would be lower than if you had a shorter term. But because this means you take longer to pay off the loan, you would pay more in interest overall. As a result, it makes sense to choose the shortest term that you can afford. Where Norwich Trust loans fall short. You need to be a homeowner to apply. To apply for a loan from Norwich Trust, you need to be a homeowner. Most lenders we've reviewed don't have this requirement, and their loans are available to homeowners and tenants alike. But even though Norwich Trust requires you to be a homeowner, its loans are unsecured and don't use your property as security. It could take a few days to receive your loan. Norwich Trust could take a few days to decide on your application, in contrast to other lenders we've reviewed may be able to offer an instant or same-day decision. Once you've been approved, you could get your money on the same day, but the overall application process could take longer than with other lenders. The minimum amount you can borrow is £3,000. The smallest loan you can get from Norwich Trust is £3,000. By contrast, most other lenders allow you to borrow as little as £1,000. Because you should only ever borrow the amount you need, Norwich Trust may not be the best option if you want to borrow less than £3,000. What type of loans does Norwich Trust offer? Bad credit loans. Norwich Trust offers loans of £3,000 up to £20,000 that you can repay over terms of 3 to 10 years. Its loans are unsecured, which means you don't need to put any property forward as security. However, you do need to own a residential home in England, Wales, or Scotland to apply for a loan from Norwich Trust. But this doesn't mean Norwich Trust can repossess your property if you fall behind on payments, which could happen if you take out a secured loan. Norwich Trust considers applications from people without a good credit history, but if approved, you are likely to be charged a higher rate of interest than if you had a better credit score. So, even if you are eligible, it may be worth improving your credit score before you apply for a loan. You should only apply for a loan if you are confident of being approved. Loan applications appear on your credit history and could affect your score, so it isn't a good idea to make lots of applications in a short space of time. Always consider alternatives to borrowing money, as a loan may not be the best option for you. Depending on your situation, it may be better to get professional debt advice instead. Am I eligible for a Norwich Trust loan? To be considered for a loan from Norwich Trust, you'll need to be aged at least 21 years old and no older than 71 by the end of the loan term. Be a UK resident who has lived in England, Scotland, or Wales for at least 2 years. Own a home, outright or with a mortgage, in England, Scotland, or Wales. Have a monthly income of at least £1,300 after tax, or £1,800 if you're under 30 years old. Norwich Trust won't be able to offer you a loan if you are currently, or in the last 12 months been, in an individual voluntary arrangement, IVA, a debt management plan, DMP, or are subject to a trust deed, Scotland. If you have been made bankrupt or you've been discharged from bankruptcy in the last 3 years, you also won't be eligible for a Norwich Trust loan. You can apply for a loan from Norwich Trust online or over the phone. After filling in the required information, Norwich Trust will review your application and run a soft credit check to see if you can afford the loan. This check won't affect your credit score. Norwich Trust will also use open banking to review your finances and call you to confirm details about your situation and your ability to repay the loan. In certain cases, you may need to provide Norwich Trust with documents to prove your identity, address, or income. It may take 2 to 3 days on average to get a decision on your application. If everything is in order, Norwich Trust will run a final hard credit check which will appear on your credit file. Once approved, you should receive the money in your account on the same day. What information do I need? When you apply for a loan from Norwich Trust, you'll need to provide your name, date of birth, current address, and any previous addresses from the last 2 years. Residential status, employment status, monthly take-home pay. You'll also need to say how much you want to borrow, the repayment term you want, and what you plan to use the loan for. How long does it take to apply? It may only take a few minutes to fill in your application for a Norwich Trust loan. On average, Norwich Trust says it will decide on your application within 2 to 3 days. Once approved, it aims to transfer the money to your account on the same day.